YouTube is live, so say something smart for me, please. Let me open up my S&P workspace as well, and let's check news. Hope everybody's doing well today. Can you guys hear me all right? Trying to come through loud and clear. Yep, awesome. I like it. Welcome to the room, guys. What is today? Today is Tuesday, the 14th of October. And in regards to news, guys, there's not a whole lot going on. We've got Fed Chair Powell speaking at 12:20, which has the potential to move that market a little bit. Good morning, Marky Mark. Was there a large chart to go with that picture? See what's happening on that big time frame? Always makes it easier to talk about what you're doing, guys, if you show me both charts. If you need help with that, let me know. 12:20 p.m., guys. Mr. Powell is going to speak, and somebody might lose their head over it, right? That's okay. We'll figure it out, Marky Mark. Just future reference kind of stuff. So at maybe 12:10, I might make the decision, hey, it's probably better to go have a sandwich, walk the dogs, do something that's not jumping in front of a freight train of emotion. Because high impact news, guys, can mess up my patterns is the easiest way to say it. The market has a memory, and I don't know who said that, but somebody smarter than me said that. The market has a memory, and the market tends to do the same thing over and over, guys. And the better that you learn the patterns that the market tends to move in, the more apt you are to find success as a day trader. I am, for all intents and purposes, probably leaning a little towards the alpha side. I like to be in control, guys. I'm a take charge kind of guy. I throw the football. I don't go pick up the football. It's been my personality for life. And it's very humbling to not be in control. It's very humbling to have zero impact on the market. When the market wants to go up, guys, it's going to go up. And when it wants to go down, it's going to go down. But the market remembers, and the market does the same thing every day. And if you take a step back and you stop looking for your money within the market, but you start looking for the patterns that they're going to do whether you're in it or not, guys, that's where the magic happens. You've got to learn to read your charts. That's my job. My job is to help you look at your charts and say, hey, I have what I need to enter a trade. I have the advantages. I recognize the pattern. This happens all the time. I can prove that it wins more than it loses. I'm going to take that trade. And that's what we do in the morning, guys, is I give you the absolute best of the best. And I don't give you these high probability trades to make you rich, guys. That's not my job. I give you these high probability trades to teach you to read your indicators, to teach you to recognize advantages. One thing I have to do real quick, CFTC, required hypothetical and financial risk disclaimer, guys. This is going to become a normal part of the morning. The CFTC likes to make sure that we do things right. Guys, everything in this room is for educational and informational purposes. I will under no circumstances tell you guys when to enter the market. I will under no circumstances tell you when to exit. I refuse to give trading advice, guys. I am here for informational purposes to teach you to read your indicators so that you can make those decisions for yourself. What you will realize is that 90% of your day is chart reading. 90% of your day is doing nothing. 90% of your day is playing video poker. It is playing solitaire, reading a book, petting the dog. It's doing anything other than being active in the market, because as a trader who wants to be successful, as a trader who wants an edge, that edge isn't there all the time. And it means that you've got to be patient. 10% of your day, probably more like 5, is actually trading, is getting into the market, is managing these trades. So what we're going to focus on is being able to read your charts, recognize advantages, being able to take that great entry, because great entries create manageable trades, guys. And when you get in tune with reading your indicators, You're going to understand first where the market is likely to continue. And this is where trades are taken. This is where trades are entered, guys, because you will look at your charts. You will say the trend is up. I have all the momentum I could ever hope for. There's nothing in the way. If that market bounces down a little bit, where is it most likely to continue with the underlying trend? That's your entry for the highest probability trend trade, and you are going to be crazy accurate with that. You'll also begin to understand where the market is likely to go, guys. You're going to see these key areas off in the distance. You're going to be able to recognize momentum through your chart reads and say, wow, with all of this pushing the market with absolutely nothing in the way, it's more likely to hit that line than it isn't. Maybe I'll hold for the bigger move. Maybe I'll loosen my management. Maybe this is the best of the best, and I'll change my approach on taking profits. And guys, understanding where that is frees you up to do that. And then finally, you'll understand where the market is likely to stop, guys. We call these termination conditions. And anytime you hear termination condition, I want you to picture in your head something that could absolutely, positively stop your forward progress. Something that could reverse the market. Something that could ruin all of your hard work for the day. Termination conditions have the potential to stop trends, guys. And you're going to know about them before you ever get to them. And you're going to have to make the decision to not trade directly into them. Or if you choose to trade directly into them, guys, you're going to have to deal with the repercussions. My first hour every day is the same hour every day, guys. I promise. I believe that repetition creates recognition. I believe that the more times you hear something, the more times you do something, the more times you see something, the more times you type something, guys, the easier it becomes, the faster your recognition comes into play, and the sooner you get to being a proficient chart reader. So we are going to learn trigger line and Fibonacci rules, guys. And we are going to do it on two different platforms. We're going to do it on NinjaTrader, talk about the high probability trend trade, the trade where each indicator on every chart agrees with the rules for the trade. This is a trade that typically wins 70 to 80% of the time. Guys, I'm going to give you the recipe for the best of the best. And we're also going to talk about TradingView, and I've done the numbers and I've ran the plan that I'm going to hand you, and this is a plan that typically wins 70% of the time. I think I was at 73. Typically can if you learn to follow the rules. Guys, the potential is there, but they're very different. So if you are a NinjaTrader user, guys, pay attention. The first 30 minutes is yours. We're going to talk about your platform. If you are a TradingView user, the second half of the first hour is dedicated to you and all your chart reads and getting you to where you want to be. The rules are different. You can't confuse the two because if you try to interchange them, it's going to create challenges, guys. So we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. Well, Mark, how do I know it's okay to trade? Hopefully, you say it's okay to trade when my rules are met, guys. This is the rules for the high probability trend trade. It's only 3 rules. That's it. And the rules describe a pattern, and the pattern can be proven to win more than it loses. It creates an edge. So we're going to learn them for both platforms. Everybody in the room has the ability to simulate, to practice, to take the financial risk out of learning the process. Good morning, Miss Trina. It is nice to see your smiling face this morning. And the first step in becoming a confident trader, guys, the first step in getting to where you want to be is probably the hardest step for a new user to take. It's probably the most daunting task for an introvert or somebody who's shy or somebody who just is afraid of presenting their mistakes, guys. Post in the room. Talk about what you see. Talk about why you did what you did. Tell me what your chart read was. And my promise to you is that I'll give you a private session. We will open up your chart. We will talk about advantages. We will look at what you did. We'll talk about where you did it. We'll talk about everything. We'll make sure that your chart read is accurate. That your translation of what the indicators are saying is exactly what the indicators are saying, guys, because chart reading is important. We'll take a look at your entry. Make sure that you have the least amount of risk. We'll take a look at your exit. Make sure that it made sense, guys, and everything that I have in my repertoire, every arrow in my quiver gets thrown at you to help you do it better. All you have to do is post in my room. The goal is that you keep posting pictures until you have the correct rules, because the rules create an edge, guys. And the further you deviate from your edge, typically the further you deviate from success. Try not to practice the wrong rules. We all do it in the beginning, guys. We all take chances. We all fight stuff. And the idea is that these short-term victories, that dopamine kick that comes from taking trades that are void of advantages, that luck tends to run out when you go live. Ask anybody in the room. They'll all tell you that jump-in trade right into areas that work so great on simulator seems to never work once you go live. Fighting triggers on simulator and finding a way and posting in the room, hey, I made $1,000. That $1,000 rarely materializes in a live market. I don't know what it is. It's like they have cameras. The second thing is keep it simple, guys. I'm going to hand you a plan, and I'll put them in the room right now. In these plans, there's one for NinjaTrader. It's called the KISS plan, the Keep It Simple Sunshine plan. There's one for TradingView. It's also Keep It Simple. And these plans that I'm dropping in the room right now, these plans are designed to optimize your chances of success. These plans are stepping stones in your learning journey. These are the plans that keep you focused on the best of the best, guys. This is not the only way to trade the software. This is the highest probability way to trade the software. And the plans that I give you only have 2 trades on them. The plans that I give you, the checklist for entry is only 3 things. And it is designed to put you into the market with the highest probability of success. You've got to know what those look like. You have to know your patterns. Day traders hate to work. It's the craziest thing in the world. Guys, you're going to have to start taking pictures. Not necessarily trades, but taking pictures. And I'm also going to give you spreadsheets. So the plans are in the room, and now I'm going to drop in the room the spreadsheets, guys. There's one for each platform. There's the TV Trade Journal. There's the Nexgen tracking sheet. And I'm going to go through both real quick because I think these are hugely important. This is the one for NinjaTrader. It's a little more filled out because we've been doing NinjaTrader for 20 years, guys. I just have more pictures. But what it does is the first tab shows you exactly what it looks like when each of the individual rules are met. It also shows you exactly what it looks like when the rules are not met, guys. And I want you to imagine that you are teaching a 5-year-old to read indicators. You are teaching a 5-year-old a new task, guys. And that repetition, seeing the same thing, doing the same thing, it's going to get that 5-year-old where it needs to be. I want you to be childlike in your approach, guys. Repetition, repetition. There's over 500 pictures of client trades. And I steal these from you guys in the room. When you take amazing trend trades, guys, I steal them. When you take amazing momentum trades, 50-50 trades, I steal them. And I drop them right into the spreadsheet as a study material. If you scrolled through every one of these, and there are some dead links, you would notice the exact same pattern over and over and over. You would see the same thing happening, done by different people in different parts of the world, finding success, and you could commit that pattern to memory. Go take pictures of that pattern, guys. Go take pictures of the advantages. Build your own plan. And then it has a trade tracking sheet, guys. Someplace for you to not only put the pictures of your trades, talk about your advantages, and a little section for the feedback on class. The same is true on the TradingView journal, guys. There's the trend trade, there's the momentum trade. Only 2 trades. I even took off the HVA trade to not confuse people. I've been adding to the management ideas for you guys. I'm looking for reasons not to trade, termination conditions. There is, once again, a place for you to put your pictures, guys. The people that take the most pictures, there's a neurological connection that happens when you take a picture of something and you type out what that picture means to you, what that visual means to you. That's going to commit it to memory. That's going to slow down the chart read. And then finally, a trade tracking spot as well. So as we get through this first hour, guys, what I'm trying to do is give you everything that you need to be successful with the software. And I know that's a bold statement, right? Everything I need, Mark, really? Absolutely. I'm not giving you everything that you can do with the software. That would be overwhelming and confusing. But I'm giving you everything that you need to be successful with the software, because I've never had anybody in the history of this Ninja Trader KISS plan, present me a week where they followed the rules to the letter and did worse than 70%. And guys, I have never in my own personal life been able to follow the rules to the letter on this KISS plan for TradingView and do worse than 70%. And if you learn the rules, if you learn the looks, if you learn the patterns, I just can't think of a reason why you couldn't potentially find that same success. So post in the room, use the spreadsheet, keep it simple, guys. This is your recipe for the high probability trend trade. So Ninja Trader users, I'm talking to you right now. This is a trade that typically wins 70 to 80%. This is a trade that creates confidence through the memory of success. This is a trade that teaches you to read your indicators, to recognize 3 advantages, and then piece them together to create a trade. These 3 rules happen on only 2 charts. There is a 13-2. It's your big chart. It's your large chart. It's a slow chart, guys. It's hard to see change, and it shows the overall opinion of the market. It will show the underlying trend. It will show direction, momentum, and areas. Rules 1 and 2, 66% of your advantages come from the large chart. It happens with 1 bar. 1 big, slow-moving bar, guys. The most current bar will define direction, momentum, and areas. When the advantages are in play, when you have those first 2, when it's time to go look for an entry, we're just going to take an x-ray of this bar, guys. And typically, on a trend trade that is successful, on a smaller, faster chart, you will see a retracement, you will see a bounce, you will see continuation, and all of that resides inside of 1 bar. These advantages don't waver while you're looking for your entry. It's just a refinement process that allows you to pinpoint entry. It allows you to maximize profit potential. It allows you to reduce risk, guys. And we use these 2 charts, and this really is still my favorite analogy that I teach. Ask yourself who you're trading with or against. The large chart define the areas, the direction. Guys, the large chart is the men and women, the institutions, if you will, the big money, the 1%, I don't care what you call them, the man. When they want the market to go up, it goes up. And when they want to really push it, they create momentum. And when they reach key areas, they're very likely to make decisions that you don't have to be a victim of. Large chart leads the way. Your small chart, that refinement chart, it just fights. The small crowd, ne'er-do-wellers, if you will. When they say up, they say down. And when they say down, they say up. It's like that old Beatles song. You say hello, I say goodbye, right? And guys, they fight and they push and they go against everything that these people want. Your entry for rule is designed to pinpoint where their failure is most imminent. Your rule number 3 is designed to put you in the market where the market is most likely to continue with everything that the large crowd wants. It's a tiny little movement. It's a very precise entry, and it allows us to reduce risk and give us the furthest distance to get to trouble. Both charts have indicators. That's what Nexgen has done for 30 years. 30 years almost. We've been teaching people to read indicators, guys. They have names. Depending on the chart, they may behave differently, but the names remain constant. So focus on the names. Divergence high is a magenta line, and it'll print if there's a loss of momentum at a pivot. If the market goes up and starts to come back down and the software recognizes that momentum is not following price, that things appear to be slowing down, it'll print that magenta line for you and let you know visually. It'll do it with a cyan line from a low. Fibonacci resistance. 1 red line created by tens of thousands of calculations, guys. This is an area in an uptrend that could stop the market, that could create a bounce, that could reverse it completely on the large chart. This is an area where it may bounce to go with that large chart on the small chart. Fibonacci support, equal and opposite, right? In a downtrend, there's your bouncy point. Yellow 1-to-1s are fibs in the moment. They're 100% Fibonacci alternate. Guys, the institutional traders, the people that control the market, love these numbers, and they print live for you on both charts. And then you'll see a mid-band, and a mid-band is just a moving average, guys. When price is below it, you'll notice that it's magenta. There's a lot of color coding. A magenta midband may behave as resistance. When price is above it, it may behave as support. It'll turn green for you. I love colors, guys, and if you learn the colors that go with it, it makes it easy, right? Magenta is divergence high, red is Fibonacci resistance, blue is Fibonacci support, and yellow could behave as either, guys. You're also going to have triggers. Triggers are the workhorses. Triggers are, man, they do everything. There's two types. There's small triggers. These are solid lines. These are a fast-moving average. And there's large triggers. These are dashed lines. These are a slow-moving average. Triggers will define momentum for rule number 1. Triggers will define termination conditions for rule number 2. Large triggers will define your unbelievably accurate entries for rule number 3. All you need to know is that these are small and these are large. John used to say a long time ago, when engineers would say, well, how are they created? What are the settings? Guys, you don't have to know how to build a watch to tell time. You just got to learn which hand to look at, right? So now we're going to break them down, each rule, one at a time. Learn them individually, guys. The recipe for a trade is momentum when rule number 1 is met. It's a clear path when rule number 2 is true. And it's defining your entry area with rule number 3. And when these 3 come together, the angels sing, guys. That's your high probability trend trade. That's the best of the best. When you learn this trade, when you understand momentum and path, guys, these are your core, your large chart advantages. It opens the door for a lot more opportunity. It opens the door for more aggressive management. It opens the door for momentum style trades, for these trades where you guys just jump in because of these advantages. So learn the basics, learn them individually, piece them together to create a trade, and then start to look for the other stuff, guys. So rule number 1, strong trigger lines. I like the verbiage, strong trigger lines. That already instills confidence, guys. That's the advantage of momentum. Large chart defines momentum and direction. If the background is green on your large chart, the trend is up. I'm looking for rules to be met for high probability trend trades to go up with it. If the background is red, the large crowd has decided we're in a downtrend. I want to go down with them because that's a huge advantage. The trend is your friend. It's the world's oldest cliche. In order to have strong triggers in an uptrend, both small and large must also be green. If you do not have 3 of the same colors, rule number 1 is not met. Little safeguard for new users. If everything isn't red, you don't have strong triggers. But strong triggers is one look, guys, and it has nothing to do with Fibonacci areas. Strong triggers has nothing to do with price bars. Strong triggers in an uptrend simply means that your small triggers have broken up and above the large triggers, that your large triggers are widening, guys. The more space, the better, and that there is a gap between the two. There is space between small and large. You can see daylight. When I have this look, the odds are favorable for the market to continue up. You're going to see it annotated on charts, OFM, guys. In a downtrend, when the smalls are red, the large are red, the smalls have broken below the large triggers. The large triggers are widening, and that space between the two lets me know that the odds are favorable for the market to continue down. Once again, odds favorable momentum, guys. It happens on the first bar. Odds favorable momentum pushes the market in the direction of the trend. Odds favorable momentum is what we look for to break key areas, guys. Odds favorable momentum will even cover some of the mistakes that we make as new users. On my most current bar on crude oil, can you give me a Y if you see that the smalls are above the large, that there are space between the two? Ladies and gentlemen, that is rule number 1. And if you took a picture of that and you drew an arrow and you said and took the time to type out all green, smalls above large, space between, odds favorable momentum, rule 1 met, look for rule 2. If you took the time to type that out, and I was having this conversation with someone yesterday, if you took the time to draw that arrow, to point that out, to get that read, went back to your Nexgen tracking sheet and added it to that strong trigger look, did it yourself, got it in there, guys, do it 25 times. You will never mistake strong triggers. You will never miss that read. You will never wonder if you have momentum. And guys, momentum is not constant. Sometimes the colors don't match. Momentum isn't a forever look. Sometimes the small triggers work their way back inside of the large triggers. Sometimes there's weakness. And when you have weakness, anything could happen up or down. And let's just see if we can get lucky. We'll open up the S&P. And nope, we have strength in the moment. Small's below the large. But guys, this look right here, when the smalls return to the large, when the smalls work inside, when there is no longer separation, anything can happen up or down. And it's probably not a coincidence that your S&P turned from the middle of nowhere, beyond the areas, that the S&P didn't continue to push up, guys. And that look of weakness should be a red flag. That look of weakness is part of your 90%, getting you focused on and waiting for the absolute best of the best look, which is 100% consistent, colors match, separation. And weakness is 100% consistent, smalls inside of the large. That's where reversals tend to come from the middle of nowhere. That's where Fibonacci is most likely to hold, guys. And once you know the difference between strong and weak, you know whether or not you have the advantage of momentum. Is everybody good with that? Guys, if you're brand new with me, if you're on a demo, if you're evaluating, if you are getting your poop in a group and looking for success because you haven't found it, participate in my room. Give me a Y if you understand it. Give me an N if you don't, and we'll go back and revisit it. That's one of the promises that I make to you. But I can't see your faces if you're confused. I can't hear your cries for help. You don't have a microphone. You have to type in my room and ask for that help. Guys, once the momentum is there, the market's hard to stop. Once momentum is there, that market is pushing, the trend is defined, life is good, it is a raging bull. And we've got to make sure that there's nothing in the way. We've got to make sure that that momentum has some place to go. No termination conditions, no areas that could stop the market. I have to have room to profit targets. Guys, the goal is to make money, and if you're trading into a brick wall, it's going to be hard to make money. I want the advantage of a clear path because rule number 2 is true. Termination conditions, large chart, horizontal lines. How easy is that? Anytime you see resistance, a divergence high, support, yellow 1-to-1s, a divergence low, I just want you to say to yourself, you know, this is where the large crowd is most likely to make decisions. This is where the big crowd, the buyers buy. This is where the big crowd, the sellers sell. This is where the big crowd, where the buyers and sellers fight one another because they can't figure out who's going to win. And guys, you know about them long before you get to them. And there is a simple recipe to define one of these horizontal lines as a termination condition. And it begins with letting the large chart get there, letting the big crowd get there, letting your dynamic Renko bars make their way all the way to Fibonacci resistance. And remember, resistance can be a red line. It could be a divergence high. It could be a yellow 1-to-1. Support could be a blue line. It could be a yellow 1-to-1. It could be a divergence low. And when price reaches that area, when the large crowd arrives at that area, all you have to do is count trigger lines. How many made it above resistance? And if the answer is 0, if all of your triggers remain below resistance, resistance is a termination condition. Textbook. Bank on it. This is an area that could reverse the market. This is an area that could create an untradeable bounce. This is an area, and it's not uncommon to see buyers and sellers fight one another, to see if the trend will continue, to see if the trend will reverse. And the reality is, you'll never know what the reaction is going to be. You'll never understand if it's going to reverse or break, and they do break. So if price reaches an area and none of the triggers make it through, guys, it's okay to sit on your hands and do nothing. This is your 90%. 90% of your day is doing nothing, guys. And it's okay because the market trades billions hourly. It takes 400 to find a six-figure career out of this. Terminations are the most broken rule because terminations force you into that 90%. If price reaches the area and none of the triggers break, you have a textbook termination. If that termination condition reverses the market, makes those large triggers go from green to red, makes those large triggers go from red to green, you have what we call a strong top or bottom, guys. And a strong top or bottom means that the dynamic, the reaction was so impactful that not only did the market start going up or stop going up, but it turned the corner. It went back down. The sellers were able to reverse it, guys. And when you have a strong top or a strong bottom, bigger moves the other direction are more likely. It's not a rule for the high probability trend trade, but it's going to pay dividends when you start taking trend trades that only have the potential to break. So a strong top or bottom sets you up for the highest probability trend trade. Terminations. 60% of the time they work every time, guys. Your advantage is gone. More losers are taken into termination conditions than winners. It's just why terminations are a rule. But areas break, typically with momentum. And this is what it looks like when an area breaks, guys. And this is the process that if you break it down to a process, not, hey, where am I getting paid? Not, hey, how am I going to make money? Not, dag nabbit, I have to sit on my hands. If price reaches an area and none of the triggers break, guys, it's red. Don't do it. No reason. You can if you want, but you're more likely to lose this trade than you are to win. The edge is gone. If two trigger lines, the small trigger lines, break through that area that was just a termination, it's still red. Guys, it has the potential to break with momentum, but it's not your best look. It doesn't optimize your chances of success. It is not the best of the best, and for new users, you don't have a plan that says take this trade with only two triggers. For the brand new user in the KISS plan, you need 3 out of 4 above resistance, 3 trigger lines with momentum. And why do we have 3 out of 4? Because we can say, if I take 1,000 pictures of only 2, it's less likely to break. If I take 1,000 pictures with 3, it's more likely to break with that momentum. So guys, this is where your advantage comes in. This is the second trade in the plan that I give you. This is the trade, taking a trend trade with only the potential to break, that mandates you have a strong top or bottom. So to add that one to your plan, make sure you learn that rule. But the best of the best, the highest probability, the clear path, guys, that is 4 trigger lines above resistance. That is all 4 triggers breaking through resistance. Now resistance behaves as support. Life is good. Your path is clear, guys, and your path remains clear until you reach the next area. And once you reach the next area, whoops, you're going to go right back to number 1, guys. When you hit the next line, you're back to 0 triggers. You're back to a termination. You're back to a point to where you have to relax and wait and see what the reaction is. And there will be times, come on, picture, when your path isn't clear because areas are stacked, guys. This is like that ominous old lady that comes out of the fog and tells you to beware. There will be times when it's support after support after support, and you're getting frustrated and you're believing that you're never going to get paid. Guys, this 3 supports in a row lasted all of 2 minutes, right? But it's going to be the longest 2 minutes of your life. 90% of your day being patient, 90% of your day waiting for advantages, 90% of your day insisting on having an edge, guys. The futures markets trade typically $220 billion hourly. You don't need every move, guys. If you focus on the best moves, if you focus on the highest probability moves as a new user, if you focus on insisting that the advantage of momentum is present, that the path is in fact clear, on your large chart, you're going to see these tails, guys. These tails, that's that pullback on a small chart. That's that rule that we are about to explore. That is where the perfect trade comes from. You're going to use rule number 3 to define right where that tail is most likely to form. And with that momentum and path, guys, you're going to pinpoint right where the market is most likely to continue. You are going to know with no uncertainty where your edge lies, so much so that you're going to use a limit order. And you're going to use a limit order to buy or sell a pullback. That's that little fight by the small crowd, that tiny movement counter to the underlying trend. And you're going to buy or sell that pullback at an area, at a fib, at a mid-band, at a yellow 1-to-1. Because the same way areas could stop a trend, they can stop that small crowd. They can create a bounce in the direction of your trade. But those areas need to be inside of triggers. And guys, once again, I'm a complete language nerd. And if you write down this phrase, buy or sell a pullback at an area inside of triggers, you will know where your trade's coming from long before the trade ever sets up. You will know exactly where your limit order belongs before the pullback ever begins. Because when the large chart says down, when the large chart has momentum, when the large chart provides the potential to break, the large chart bar is trading way down here, guys. We rely on that refinement process. The small chart offers a little pullback. The pullback is what creates the tail. In a successful trend trade, that pullback typically bounces right off of an area, off of a fib, off of a mid-band, off of a yellow 1-to-1. In that area, more often than not, patterns that repeat themselves are inside of large triggers. Guys, all this is a pattern. And the large chart advantages don't blink during all of this on a small chart. So buy or sell a pullback. That's that little retracement counter to the underlying trend, the small crowd fight. Buy or sell that pullback at an area, at a fib, at a mid-band, or a yellow 1-to-1, and make that area be inside of triggers, guys. And the tighter those triggers are, one on top of each other, the smaller the pullback retracement zone is, because price returns to these triggers, guys. It's a moving average thing. Your trigger lines will define where the retracement is most likely to occur. The tighter they are, the smaller that range becomes. The least amount of room that you have to put an area inside. So favorable large triggers means that they're stacked one on top of each other. And guys, that's the highest, the best of the best. That's where I get warm fuzzies. And this is your entry pattern. And just a heads up, you've got the exact same entry pattern. Entry sequence short, entry sequence long, breaking it down step by step. You're going to see the exact same pattern on 500 pictures right here. You've got to learn exactly how to do it, guys. So when the large chart is up, let's do it with a picture. When the large chart says up, when the large chart has strong triggers, when the large chart has a clear path, guys, when the large chart rules are met, right about here, you're going to panic. You're going to say, oh my gosh, they're going without me. I'm never going to get paid. I hate Nexgen. Why am I doing this? Trading is so hard. And then the pattern begins, guys, and the pattern begins with this reversal bar. And this reversal bar is not your entry, guys. This is like a little loss of momentum that starts the push back to your perfect entry. At the time of the reversal bar, you can say with no uncertainty that pullback is most likely to go somewhere from the top of those large triggers to the bottom. I don't know where, but it's likely to go somewhere in that range. This is where the push down is most likely to happen. Trigger lines define retracement. And then you're going to say to yourself, it's most likely to bounce at an area inside of those triggers. And I don't know if it's going to be the highest area or the lowest area, but it has the potential to make it to and bounce from either. It creates a window. I call it the window of opportunity. And guys, the window of opportunity is the area where the market is most likely to continue. Here comes that phrase again. Because of the large chart momentum, because of the large chart clear path, guys, because of the small chart screaming up, you're going to activate a limit order just at the top of that window, just above the highest point of support, whatever is closest to that reversal bar. And this becomes your entry for the highest probability trend trade. And when you take this entry at the top, guys, and this is something that scares new users, remember, it could retrace all the way to the bottom of those triggers. It might go to the lower area and bounce, right? It's not obligated to bounce from the top. We just don't want to miss that trade because the large chart is screaming north. And because you know where the retracement is most likely to go, guys, because you know where the bounce is most likely to happen, you also are going to learn that anything beyond those triggers is outside of that window. Anything below the triggers in a long trade is the wrong side of the triggers. Once you get below that retracement zone, you don't know if, when, or where the market is likely to continue up. Next to trading in determination conditions, taking trades from the wrong side of the triggers is a huge producer of losers for new users, because this is where the advantage of rule number 3 is no longer in play. You're going to train yourself to not just arbitrarily take entries from the wrong side of the triggers. In a downtrend, reversal bar begins the pullback. It's not the entry, guys. That's the loss of the momentum that gets you to the entry. Trigger lines define where the market is most likely to retrace. Areas inside of triggers define where the market is most likely to bounce. Guys, your job is to study this pattern enough to develop the trust in the methodology to activate a limit order just below the lowest point of resistance, closest to the reversal bar. And you will understand that your advantage is gone on the wrong side of the triggers. Rule number 3 is no longer in play on the wrong side of the triggers, guys. This is where the market shouldn't go. And you're going to use that concept for your initial stop placement. I used to say it more than I do. Maybe I should say it more. Great entries create manageable trades, guys. Great entries give you the least amount of risk. And your initial stop will go where the market shouldn't go. Generally about 5 ticks above those triggers for a short, about 5 ticks below those triggers for a long. And the second sad fact that for new traders, first I have to tell you that you're not in control. And now I have to tell you guys that anything that typically wins 70 to 80% of the time, do you guys know where the sadness is about to go? It's obligated to lose 20 to 30% of the time, guys. 20 to 30% of the time, you're going to lose this perfect trade. 20 to 30% of the time, it's going to be a cost of doing business. And guys, great trades fail. It's a true story. It's a real fact. Great trades will fail. You will know exactly where it's time to pull the plug on that trade, and this helps you minimize losses. But you will also minimize losses, and this is in the KISS plan, if you get a reversal bar in the direction of your trade, if you get a confirmation bar in the direction of your trade, you'll be able to tighten your risk even more, guys. And it's not uncommon to see new users take the perfect entry and have maybe 20 or 30 ticks of risk on that trade. I'm sorry, 20 or $30 worth of risk, 2 to 3 ticks, because of their great entry, because of this pattern that repeats itself every time, guys. So you got to go back and you've got to study this pattern. And it's going to look like this every time. When you have strong triggers, if you have a clear path and you see that tail, this is how you're going to study. I want you to circle that tail, guys. Recognizing this pattern is easier if you do it when the market isn't moving initially. Circle the tail. If it lines up with an area inside of triggers, guys, you have a high probability trend trade. And let's just see if it happens. Even that tiny little tail, check this out. Even that tiny little tail was a pullback right to an area inside of triggers with momentum and path. Did anybody catch that one? Ride that wave down? I hope so. That's a good look. Let's see if we can find another one of those tails. There's a little tail with all the potential to break, and if you scroll back and look at that tail, what's it look like? Man, there's a pullback right to an area inside of triggers. Guys, the market has a memory. The market does the same thing, and it does it day in and day out. And when you have momentum and your path is clear, guys, you can say with no uncertainty, if I get a pullback, what is this, crude oil? If I get a pullback to an area inside of triggers, I'll take that trade. And guys, before a reversal bar ever printed, I can see my triggers. I love it when this happens live. Before the reversal bar ever prints, I can see the areas inside of triggers. Before the reversal bar ever prints, I know exactly where my stop goes, up here where the market shouldn't. Before the reversal bar ever prints, I have called my shot because of momentum, because of the room to trouble, because of the areas inside of triggers. Guys, does that make sense? This is your high probability trend trade happening live right in front of you. Do we get the reversal bar? Come on, crude oil. There it is. There's our reversal bar. There's the bottom of my window. There's the top of my window. There's where my stop belongs. As that mid band comes down, I may choose to drop my entry a little bit. And guys, this doesn't guarantee a win, but what it does is it repeats a pattern that you can prove wins more than it loses. If I take this exact look 10 times, my rules are met. If I take this look 10 times, I'm likely to win 7 or 8 of them. I'm likely to lose 2 or 3. I never get to pick. I never get to pick whether it's a win or loser. I never know if it's going to be a win or loser. But I know that with this pattern, with this entry, with this stop, I'm more likely to win than lose. Guys, are there any questions about the high probability trend trade? Are there any questions about momentum? Are there any questions about whether or not prices reached an area? Whether or not all the triggers are below the previous trouble? Any questions about how I picked my entry spot? Areas inside of triggers are most likely to create a bounce. That's it. I don't know if it's going to even give me an entry. I don't know if it's going to win. I don't know if it's going to lose. But guys, in this classroom, if the rules are met, we will pull the trigger for educational purposes. If the rules are met, I will activate a limit order. If the rules are met, I will manage it per the KISS plan that I hand out every day. So we're going to hang out and see what happens here. It either gets us or it doesn't. We either win or we lose. I'm not in control of that. But that sure is a good look. And I would be remiss to not pull the trigger, because my plan says when I have strong triggers, when there's nothing in the way, when I get an area inside of triggers, I'm obligated to take that trade. I'm obligated to take it and be comfortable with whatever the result is. Guys, the KISS plan says that you'll take profits at $100 and $200. The KISS plan says if you get a reversal bar in the direction of the trade, you'll reduce your risk. And guys, with this market coming up, a lot of you are panicking. A lot of you are saying, oh no, it's going against them. I'm still in the retracement zone. I'm still below areas. I haven't gotten to where my advantage has gone yet, guys. And let's just see what happens. We're waiting and hoping for a reversal bar that may or may not come. Are there any questions about this trade? We're going to let it play out, guys. If we get a reversal bar, we will reduce risk behind that reversal bar. We will redefine where the market should not go. All we need is confirmation. I need that push down. I need it to hit that reversal bar marker. And if that happens, our new stop will be at 48. Until that happens, my stop stays at 56, guys. I've got 21 ticks, $210 per risk on this trade. Some people say, Mark, that's too much risk. You know what's too much risk? Taking the wrong trades. You know what's too much risk? Not having momentum to push the market in the direction of the trend. Guys, our new stop is in place. It's 13 ticks. The market bounced directly from the one-to-ones. I'm still powerless. I don't know if it's going to win, but I have a plan. And my plan says, that's your stop. Don't move it. Not as a new user. Learn to accept the risk on a trade. Learn to define your best entry. Be okay if it doesn't work out. And guys, I don't know if it's going to work out or not. But I do have momentum. And there's nothing in the way. And this is a trade that typically wins more than it loses. And I refuse to panic. I'm okay with whatever the result is, guys. And it's funny because when I do this in the room, there's a lot of people that will look at one trade. If this trade doesn't go the distance, they'll look at this one trade and they'll be like, oh, well, I guess the methodology doesn't work. Oh, I guess the pattern's not a true pattern. I guess Mark doesn't really know what he's talking about. Guys, go through here. Click on these links and look. Momentum. Didn't reach the area. Pull back to an area inside of the triggers. This picture is from 2023. And it's the exact same look. It's the exact same pattern that we're involved with right now. It's all it is. The market has a memory. It does the same thing every day. Moves the same way, right? Guys, at one point we were down over $200 in this trade. But we put our stop in the right spot. We put our stop where the market shouldn't go. And so far, that seems to be doing its job. We got confirmation that the large crowd is trying to take back over with all that momentum. You can see the fight, the downs, the ups, but my rules say 2 ticks above. So far, we're doing all right. I'd love to see a winner for you guys. I'd love for you guys to watch it play out. But you'll notice that there's no fear in my voice. I'm not worried about losing a simulated trade, guys. What I'm worried about is whether or not I actually had momentum. What I'm worried about is whether or not my path was actually clear. And what I'm worried about is whether or not I did a good job defining where the market was most likely to bounce. Because once I do that, I can start taking advantage of other momentum trades. I can start taking advantage of other great looks with clear paths, guys. I can start taking advantage of terminations that reverse the market and finding better entries. And it all stems from this one trade, from this one concept of momentum, path, and entry. So decisions are being made, guys. You can see the fight. You can see the fight between buyers and sellers. No questions at all. That's amazing. You guys are brilliant. I love it. But Mark, the small triggers are up. Yeah, momentum is defined on the large chart. But Mark, there was a 1-to-1. Yeah, but terminations are defined on the large chart. And guys, we're pumping the brakes until we go to TradingView. We're going to let this one finish out together as a group. And it's either going to win or it's going to lose. And man, it's hard for new users to see red numbers. I know it is. It's hard for new users to watch a trade go against them. It's difficult for new users to fathom the idea that not every trade is going to win. That sometimes the best trades will lose. But it's not about the one trade, guys. It's about the sample. It's about the 20 trades that you take. Did they all fit the rules? Did you give yourself an edge? Were those advantages in play? And good things tend to happen more often than they don't. Man, just come on, sellers, right? It's okay to do the down dance. It's okay to wiggle a little bit, to cheer for the sellers to take over, to root for the large crowd, guys. It's all right. You're in a trade. But if you allow it to be pragmatic, if you allow it to be emotionless, if you allow it to be if-then, it takes a lot of stress. Victor, you made a mistake in your favor on paper for 1630. That's a happy little accident, isn't it? One pattern. It's just one pattern, guys, and it is rooted deep in 3 advantages: momentum, path, and entry. And if you go back to it every time and you say, yes, there was momentum, absolutely there was a clear path, for sure there was an entry, then you start not worrying. You start not caring what happens. John Novak used to say, I don't care if it wins or loses, because I know that it wins more than it loses, guys. And that's where we're at right now. We've been 40 bucks up and $200 down, and now we're 20 bucks down, and now we're break even. Yes! Hurrah! Huzzah! And we're watching that small chart, and it's making us freaking nuts. And now we're up 40, and oh no, we're back down to 20. Anyone ever do that? Guys, slide back. Get the mouse out of your hand. Let it do what it's going to do. Let the large chart do their thing. Let the large crowd do their thing. Let the large crowd push. Let the small chart fight. It either wins or loses. Not in control. Everyone always says, Mark, will you trade live? Mark, will you trade live? There you go. This is it, live. Mark, take profits. You're up $100. No, my plan says let it hit the first target. But Mark, what if? What if it turns against you? Mark, what if it hits your stop? Mark, what if you lose money? Well, it's a cost of doing business. It's a cost of doing business if this one doesn't go the distance. That's a beautiful looking large chart, isn't it, Pete? That is the best look, really, I think you could ever get. Now, later in life, you guys may manage these a little differently, right? You might say things like, oh, if there's a second pivot up and it has divergence, I'll exit and re-enter with a reversal bar. But guys, as a brand new user, one of the greatest things you can do is manage per the KISS plan, because it teaches you where to put your stops, guys. It defines where the market shouldn't go. It gives you your first stop placement. It defines your targets. And if you let it run out, guys, you're going to learn a lot. If every time you take a trade, you get caught up in emotional fluctuations, you're going to exit the perfect trade, right? If every time you enter a trade, you're focused on the money, that 1 to 2 ticks, guys, you're going to drive yourself nuts. You're going to say things like, oh no, I'm in, but let me reduce risk, right? And then it gets hit and goes without you. Or, oh no, I don't want to get my stop hit. I better leave $1,000 on a trade. No, guys, let it be mechanical. Let it be pragmatic. Let it be emotionless. Let it play out. That's what simulator's for, guys. This is the batting cages. But Mark, the background turned green. That's okay. Look at my large chart. Has the large chart lost the advantage of momentum yet? Does anyone, what do you think? It's still strong down, right? Has the large chart lost the advantage of a clear path? It really hasn't. Did the window of opportunity change? It didn't. What am I worried about? Am I still in the retracement zone? I am. Am I still below areas inside of triggers? For sure. Just let it play out. Just have fun. Guys, trading doesn't have to be stressful. I know in no uncertain terms I'm not in control of this trade. The only thing I can ever be in control of, ever, in my entire world, is whether or not I have an edge, whether or not my rules are met, whether or not I have momentum, path, entry, and it's high probability. And guys, I'll be in control when one of them go away to manage assertively, when 2 of them go away, perhaps even to make the choice not to enter the trade. This one's taken forever and forcing me to talk, right? Whew! Can't do anything. It either hits my stop or it hits my target. So trading view is going to be the next thing that we talk about, guys. If you're one of my trading view users, it's a different setup. It is still divergences, 1-to-1s, mid bands, but Fibonacci is not a part of trading view. Fibonacci is not being programmed into trading view yet. We're trying, it hasn't been pulled off. So there's a company called Chart Prime that offers zones of supply and demand that are pretty freaking amazing. And these zones will do the same role as Fibonacci. It either, just don't trade into them, right? You know where they're at. They could stop the market. So zones are a big part. And then the time frames are different. It's not a Renko bar chart, guys. It's 15-minute on the large chart. It's a big slow chart. It'll define direction, momentum, key targets, areas. I've even pulled the large triggers off because they're just too slow. I've pulled the colors off because you don't need them. And then your 1-minute chart will define the immediate strength, guys. The 1-minute chart will define great entries. And we do it because, once again, you're not in charge. You're not in charge. The large crowd's going to do what the large crowd wants to do. The small crowd's going to fight them. And guys, they're going to take you back to your beautiful entry. So I wanted to throw that out there. When you're in a high probability trend trade and there's nothing to do nothing. Right? We're back at it. We're still going. And man, they are trying so freaking hard to push this thing down. I sure will, Pete. Pete, the easiest way to do it is take the KISS plan and just click on that, and it's pre-set up for you 100%. That's the easiest way, but we can go through it. Here, I'll drop that plan in there again, or even better, I'll just copy the link. And if you click that link, it'll open up in your browser. Just save it. And when you save it, you'll be able to come over and grab it. Man, I sure wish it would just go down or take me out, right? This is crazy. Just change it. So take your NASDAQ one, build a new one, change it to ES, or I guess you could do that, huh? I guess I could do all the work for you, Pete. I'm just kidding. There you go, bud. But the same is true, guys. If you want to do, we did it with silver yesterday. We took a gold chart and just changed the symbol to silver, and it's the same setup. And we're not in control of anything. So here's how you're going to read your large chart, guys. I'm watching the P&L on our trade. We're still in it. It's sitting at break even. There's three things that happen when you read your large chart, guys. The first one is you're going to let the small triggers define direction. And there aren't large triggers because it's 15 minutes. It's too slow. And you're going to let the small triggers, whether they're up or down, tell you which way you should be looking for trades. This is exciting for you guys, so I want to get back to it. Still in this trade, guys. If the first target is hit, they were so close. If the first target is hit, we'll move to break even and take all the risk off of the trade and see if they hit the second target. Momentum is still there. Clear path is still there. Let's finish this trade out before we go into reading the charts. I don't want to confuse anybody. Missed us by a tick. Guys, if you're a brand new user, you are dying right now looking at a trade that's up $100 and giving you the idea that it may reverse, right? Let it play out. Good morning, Mrs. Novak. Just let it do what it's going to do. I've got all the momentum I could ever hope for, guys. My path is as clear as the day is long. My entry was perfect. My stops make sense. You could even, if you wanted to, reduce risk behind pivots as it went down, but that's not in the KISS plan. So we're just going to leave it, and we're going to see what it does. And man, we were up $180, and now we're down 20. Dang it. The market is not fair. But let's look at it. I still have momentum. I still have path. Now my small triggers have turned in the direction of my trade. I love that, right? That's a bonus. One divergence doesn't scare me. Heck, they even took the momentum away from the buyers. The buyers tried to steal it. The seller said, "Pah, a pox on you. We'll take it right back." Guys, if you get caught up in these little fluctuations, they will drive you nuts. You will talk yourself out of the momentum. You will talk yourself out of the clear path. There's our first target. Now we go break even. Absolutely nothing to lose. Let's see if it hits the second target. Ladies and gentlemen, you are up $100 in this trade. It is in the bank. Your palms should not be sweaty anymore. You have absolutely nothing to lose. You still have all the momentum. Your path hasn't changed. I mean, my goodness, relax. It either goes to your $200 target or it doesn't, guys. The worst case scenario for this trade is $100. Is anyone new to Nexgen right now going, holy shit, he just called a shot? He entered right where the market was most likely to continue. He didn't panic when the small chart created fluctuations. He kept talking about large chart advantages. He only moved a stop when it made sense to move the stop. Guys, this is what I teach every day. Every day I talk about a high probability trend trade. Every day I talk about a trade that wins more than it loses. Every day I teach this exact pattern. And guys, if you just learn the patterns, It takes all the stress out of trading. Is it going to win or lose? Does anyone know? Here, let's do this. There's really only one way to find out. You guys know where I'm going, right? Will this trade win? That's about as accurate as I can get on knowing whether I'll win or lose, right? It says we're going to win. Well, I think it's cheating because we've already won. We've already made $100, guys. They can't take that from us. Marky knew that it was going to be the 8 ball, right? But let's talk about what's still good in this trade. The momentum is still strong. The path is still clear. My small triggers are down. I'm below the large triggers. I'm below divergence. My synthetics are still down. Guys, I can't find a reason to exit this trade. I can't fathom a reason to jump ship. Not yet. Everything's going my direction. But Mark, the trend is up. No, it's not. The trend is down. But Mark, the smalls are above the large. No, they're not. The smalls are below the large. Do you see it? It's the large chart that is the driving force of the trades that you take, guys. The large chart tends to win. The large chart is what sets you up for success. And if we could just get the small crowd to get their poop in the group, let go, stop fighting, we could get on with the lessons. Oh, so close, guys. They hit us, but they didn't take us out. There we go. Is anybody in the room not an owner? Because you should be. Congratulations, ladies and gentlemen. Live in front of you, we took a high probability trend trade. We called our entry. We managed it. And you guys just made $300 of pretend money. Welcome to Nexgen. This is where I drop the mic. But let's get off of Ninja Trader and let's talk about TradingView, guys. Because the same way that trade was emotionless, the same way that trade was nothing more than if-then, you can do the same thing over here, guys. So small triggers define direction. It's either up or it's down. If you can't tell, if it's kind of flat, if you can't get any conviction out of it, if they can't define their direction, how the hell are you going to define your direction? Sit on your hands. Let them get a little conviction, guys. Does everybody get up or down? Pretty easy. Once you decide that these triggers are up, you're going to ask yourself, where's the current price in relationship to those triggers? Guys, 15-minute bars. You could go fix a sandwich, toast a waffle, have a cup of coffee, call your spouse, and walk the dog before one of these bars is done printing. So we have to refine it a little bit. Where is the most current price? It'll be highlighted. And this is just a zoomed in picture of this. There's only 3 options. It could be to the left side of the triggers, guys. And the left side of the triggers is where you could say to yourself, this is my best momentum look. This is my strongest look. This is where great things happen. This is where bigger moves come from. This is where 1 minute areas on my smaller refinement chart have the best chance to break. Strong side is your best look. If you are to the right of the triggers, and it doesn't matter if it's an uptrend or a downtrend, you're either left of the triggers on the strong side. You can also be to the right side of the triggers, guys. This is the weak side of the triggers. This is where you are right before a reversal. And on the weak side of the triggers, guys, this is where this is that anything can happen look. This is where 1 minute areas are most likely to bounce. And guys, I want you to see this. I took this picture earlier today. From the 1 minute side of the triggers, dang it, that's not the picture. I'm in like this constant state of trying to get you guys to just recognize the basics. And let me find that picture that I took. That's not it. I'm gonna find it, don't you worry. I can't remember which color I typed in. Defines immediate strength. It was this one. So guys, if I'm up but it's weak and I have strong triggers against me, this is anything can happen triggers, and this is immediate momentum against me. Guys, I want those of you that are losing trend trades from the weak side to just stare at this picture for a little bit. If I'm on the weak side, 1 minute areas are most likely to bounce, guys. If I'm on the weak side, I want my small chart to be good. I want it to be supporting the idea of a long trade, not fighting the immediate strength down. And if I'm inside, the most current price is inside of the triggers, guys. I'm not quite strong. I'm not quite weak. This is where I'm managing. This is like a medium probability scenario. This is where if there's something in my way, I might take half of my contracts off. I'm going to get to a break-even level, ASAFP, because I could be transitioning to weak, right? I could be in transition and it just finishes strong. I don't know. So I'm going to manage, guys. Where price is in relationship to the triggers will set you up for the management of your great entry. And then the most important question, do I have room to targets? On my large chart, with my triggers up, from the strong side of triggers, do I have room to make money? And guys, if you can't answer yes to number 3, your highest chance of surviving the market is simply not taking a trade, not even looking at that 1 minute. But if you do, there's 2 types of trades that you'll take. The first one is what we call a momentum trade, guys. This is not the most common trade, but this checklist is designed to optimize your chances of success with it. And it starts with nothing in the way on the large chart. You'll notice that it doesn't even start with momentum. It starts with don't trade into stuff, guys. Don't trade into things. And I probably should change that to the 1 minute as well. Your 15-minute chart must be the strong side. It has to be that best of the best look, guys. It has to be to the left of the triggers, to the strong side of the triggers, to the hard to stop look, to the best momentum look. And then your small chart must also have strong triggers. And it's no different than it is on NinjaTrader, guys. Strong triggers is separation between the small and large. You don't even have large on your large chart. Separation, space. Guys, that gap lets me know that I have strength. This is the only look for a momentum trade. And if you have these things, you'll actually use a limit order. You'll wait for the market to come to you, right at an HVA, right at an area, and you're going to use that limit order to buy or sell. And it's not like a trend trade. Your small triggers have to be up. You have to be on the strong side. There has to be nothing in the way if you're following this plan. On your 1 minute chart, you break through an area of resistance in this uptrend, guys, because areas of resistance, when broken, behave as support. You must have separation between the small and large. And guys, when I talk about letting an area break, let price get through it. Let price get to the other side. And then when it pulls back to that same area that's been broken by price, this is where you'll put your limit order. Right there. It's the only trade that uses a limit order. And you will buy that market. You'll wait for that market. And you'll say, man, I sure hope strong side of the triggers and odds favorable momentum pushes it up. That's it. This is about 10% of your trades, guys. And it always relies on strong side of the triggers. It always relies on room to targets. It always relies on strong triggers. And it is a pullback right to the zone, that quick snap. And you're hoping momentum pushes the market down. Not a lot of risk on these trades, guys. If they get through that area that you're hoping holds, you're like 2 to 4 ticks below it. This is a small loss. And when a momentum trade fails, and guys, they will fail every now and then, it typically turns into a trend trade. I say with no hesitation that a trend trade is my favorite trade. That a trend trade is going to be the most common trade. That the trend trade is going to force patience on you because of the entry. And it starts with room to targets. Rule number 1, guys, both trades, room to targets on the big chart. Make sure you're not trading into something. On your 1 minute, make sure you're not trading into something. Make sure you've got room to get to the next sign of trouble. And then finally, you're going to buy or sell a close on the correct side of the small triggers at 1 minute mid bands and areas. And it looks like this. Your large chart in this particular instance is up. You're in the transition side of the triggers, which sets the tone for management. I know that I may need to take profits in an area to get to break even. I've got my management hat on, but I've got all the room to targets. There is nothing in the way. It is clear blue skies. Your small chart is screaming up as it does, guys. Your fear of missing out is kicking in. It never really breaks through the area. The small triggers roll. And guys, the moment those small triggers pinch and roll against you, the moment they change direction, I want you to say out loud, because the smalls roll down, my rules say wait for a pullback to an area. Wait for a pullback to a mid-band. Wait for a pullback to one-to-ones. Wait for a pullback to zones. Give the market something to bounce from. And we don't just jump in. We don't hope that an area holds, guys. We force the market to close an up bar in the direction of the trend. Both corners finish on the weak side of those small triggers against us, guys. That's your entry for the trend trade. And what you'll notice is that the market doesn't even try to go down until it gets to the other side of the small triggers. And the market doesn't even attempt to go up until it gets to the other side of those triggers. And the market screams down until it gets to the other side of those triggers. And guys, this little patience piece is going to pay huge dividends. That little patience piece is going to keep you from fighting the immediate strength. Waiting for the area is going to keep you from getting head faked into a trade. Waiting for the pullback to the actual area. In a downtrend, it's the same thing, guys. Triggers are down. Where am I in relationship to those triggers? Do I have room to trouble? Now I go to the small chart and I say it out loud, scaring the crap out of my cat. Because the small triggers roll up, I have to wait for a pullback. Guys, you're going to like draw boxes around mid bands and zones that are further away. And then I have to wait for a down bar to close on the correct side of the triggers. And if it does and I have room, that's my trend trade. Are there any questions? These triggers are up. We're on the strong side of the triggers. There's room to trouble. I didn't have the momentum for a momentum trade. It pulls back to the lower zone and it finishes on the correct side of the triggers just above trouble. And guys, some of you are probably in this trade looking to take profits somewhere up here at that next zone, looking at that VWAP, looking at that outer band. And I am missing the VWAP on my large chart. So I'm going to go to my indicators real quick. And I'm going to go to settings and inputs. And guys, under inputs, oh, it says that it's going to show it. I'm going to take that off. I'm going to put it back on. I'm going to click OK. This VWAP, guys, these are like brick walls. Pretty crazy. And trading directly into them is no different than trading into a termination. S&P, small triggers are up. Strong side of the triggers. I have about 2 points before I reach things that could stop my trend. I have absolutely no room on my small chart. This is one of those times where I'm going to say absolutely no trades. I don't care what happens. I don't have any room to make money, therefore I choose not to try to make money. And guys, it's rinse and repeat. There's the first trade, still momentum, still clear path, still a pullback to an area inside of triggers, still a reversal bar to minimize risk. I don't know if that one's going to go down to the promised land. Who cares? We already made $300. But that one fits the rules as well, guys. That's the same look. It's the same pattern. It's the same area inside of triggers. Rinse and or repeat. That's how you get to where you want to be. So that's my first hour. I drug it out a little bit because we took a live trade. So the second half of the room, guys, is feedback on charts posted. The second half of the room is answers to questions presented, guys. And I want to share with you before we go into the second hour, before I take my first break, this was actually a response to an email that was sent to me by a pissed off demo user because people were taking trades that were not high probability trend trades in the room. And it was angry. Pablo keeps fighting triggers, and Marky Mark's not waiting for areas inside of triggers, and Trina's not even trading with the trend. And they were so upset about what everybody else was doing that they didn't bother to handle their own business, guys. So I replied, and this was my reply, and I think it was pretty nice. I think I was friendly. Guys, the key to everything that we do is building a foundation. The key to everything in this room is learning to read your charts, to be able to look at it, to recognize advantages, to take a high probability trend trade, guys. Understanding the basics, laying that foundation, and then growing and building. So for all of you brand new users, for my demo users, for you guys that aren't finding the success that you want, guys, it's okay to blanket with very conservative rules. And the KISS plan is hyper conservative. And it's okay to just learn how to recognize advantages, to have a solid plan that optimizes your chances of success as you learn to read your indicators, guys. So for you brand new users, all termination conditions are bad. For brand new users, it feels like no momentum is the kiss of death. For you people that are just starting out, any area beyond the triggers for entry, just shoot yourself in the foot. Why bother, right? These are blanket rules because it increases the likelihood of success, guys, and confidence comes from the memory of success. So if you increase the likelihood, you increase the opportunity for confidence. And they're not always bad, guys, but until you know when to use exceptions, it's just safer. Just like anything, the more time you spend with it, the more you'll see, and this opens doors for you guys. You've got to learn the process that yields the results, and that's exactly what it is. It is a process. It is a pattern. And it is the process that yields the results. And the results seem to follow the process. That's where the KISS plan comes in. If you keep it that basic, if you follow simple rules, if you're okay not looking for all the trades, guys, only the best trades, you can find an extraordinary level of success. I'm not pulling chains when I tell you guys, I've never had anybody follow the high probability trend trade checklist and do worse than 70%. Never. But if you don't follow it correctly, you don't get the same results, right? So I encourage new users, prove me wrong. Be a skeptic. Decide that I'm full of crap, right? Learn to follow the plan. Surprise yourself. I've watched it over the years, guys. The further new users deviate from simple, the longer they take to learn how to be comfortable with pattern recognition. And some of you are hearing those words right now and saying, you know what? You're absolutely right. I haven't learned the simple, and I'm not comfortable like I wish I was, guys. So question everything. Post in the room. Ask a million questions. I encourage it. I want you to learn, but I want you to give yourself a little bit of grace. When you're new, it's okay to be new. It's all right to not know everything. It's okay to make mistakes, but if you go through that process, guys, if you learn how to identify the very basics, if you learn how to read your chart in the core way to read it, it's going to increase the likelihood of success. So when you post in my room, I want to see how you read momentum, and I want to see your thoughts on the terminations, and I want to know where you entered and why, because I want to give you the best possible feedback. And if you're on TradingView, I want to know what direction you should have been going, and I want to know where price was in relationship to those triggers, and I want you to tell me that you had room to targets before you tell me you took a momentum trade or before you identified your trend trade entry. And guys, if you do me that honor, I will give you the best feedback I know how to give you. If you do that for me, I will do for you. So as we go into the second hour, my promise has been fulfilled. You have everything that you need to read the indicators. Let's go to this picture instead. You have a plan. You have the ability to get feedback. You have pictures of what it means to have the rules met. Guys, Nexgen provides you analysis, rules, and coaching. That's our job, is to give you the best indicators in the industry, guys. We've been doing this for nearly 30 years. You will be responsible for becoming the profitable trader. You will be responsible for learning the patterns, for studying, for presenting in class, for filling out your spreadsheet with 1,000 pictures to create recognition. Nexgen's here to help, but you have to do your part, guys. And when I talk about pictures, I hated pictures in the beginning. But I've got 16,752 pictures, guys. And every time I type on a picture, it creates a connection between what I see and what it means to me. Every time I look at momentum and I point out this is momentum, I get excited. And when I talk about my path, I get excited. And when I define my entry, I am making the journey to consistency a much shorter journey. And that one didn't work, did it? But it could have been a really small loss with that reversal bar. Good stuff. So guys, as we go into the second hour, post them all. Marky Mark, question on NinjaTrader. Can you remove the stop market up or down to, oh, absolutely. So if I'm in a market, if I'm in a trade, Marky Mark, this is where my stops are initially, right? And guys, this isn't a real trade. We're playing on simulator. If I think it should be a bigger move, I'll click that top one. And when I re-click, it removes it. And if I want to try to take this one up to Fibonacci resistance, boom, I can click it. I can move it. I can do the same thing with my stops if I want to let it breathe. If I want to get paid at $100, I go to $100. You are in 100% control of everything that you do, guys. You are in 100% control of the entries that you take. You are in 100% control of the way you manage a trade. It's not my job to tell you when to get into market. I refuse to tell you when to get into the market. I refuse to tell you how to manage the trade, but I do hand you a plan that you may choose to follow, and we watched that plan work beautifully earlier. So you have to make your decisions, and we'll end it with that, guys. This is an educational room. This is a room designed to teach you to read indicators, to let you make your own. It's for informational purposes. Hypothetical performance is just that. It's hypothetical. Use caution. Consult your investment advisor. Guys, all of this lets you know that I take no responsibility for your trades. My job is to teach you to read indicators. So we're going to get in the habit of posting that a little bit, because I don't want you to ever say, Mark told me to get in here. I don't ever want you to say, Mark told me that's where my stop goes. I don't ever want you to say it, guys. So I'll be back in 5 minutes. We'll go through every picture posted. We'll talk about them in terms of advantages. And guys, the floor is open. Post them if you have them. Ask questions if you have questions. I'll see you in about 5 minutes.